Good morning and welcome everyone to the Money Control live stream. You're watching the opening bell and I'm your host Nikki Mirchandani. Indian shares are set to extend losses amidst mostly negative global handover. Look at that, markets, if you've seen in the recent few days, have been stuck in a range. Next big trigger, of course, will be RBI monetary policy outcome on Feb 8th, the meeting for which starts today. A lackluster opening due to the Chinese market concerns and the volatile nature of the US stock market is expected to weigh on Indian equity market sentiment. GIFT Nifty indicates a negative start coming in for the broader index in India with a loss of around more than 0.1%. Overnight, Dow Jones and S&P 500 ended in red amidst worries over fewer than anticipated rate cuts by the US Fed. Asian markets trade with cuts on the back of weak handover from Wall Street. Shanghai rises in early trade after China puts in trading restrictions on local and offshore investors. FII and DII data. FIIs have bought in, rather let's just say, shares to an extent of 518 odd crore. The trend, or let's just say the amount, is minuscule, but the trend that is shaping up seems to be more on the buying side of late. DIIs have sold in shares around 1,188 crore. What we have in terms of earnings that we need to watch out for: Britannia Industries along with Nykaa, along with the newly listed entity that is Azad Engineering, Birla Corporation 2, Godrej Properties along with JK Tyres and Industries, Max Financial Services and Naveen Fluorine International, combined with Nazara Tech, Trident, Tara Teleservices and Zaggle Prepaid Ocean Services will be reporting in their December quarter earnings on Feb 6th. But that's all that we have in terms of the trade setup. Overall, if you see, look at the market, it is it's stuck in that range and it is respecting that range also rather. But, there have been a couple of stocks that I'd want to highlight ahead of the conversation that we have with our technical analyst. And right at the top of the list is HDFC Bank and Jio Financial Services. Along with that, of course, Paytm is also expected to be in focus. We'll figure out whether now Paytm belongs to the buy camp. There will be an entry point. Is that an actionable idea? Jio Financial Services, on account of that clarification that has come through that it's not looking to buy Paytm wallet at this point of time. The reports, of course, as it has informed to the exchanges, are pretty speculative in nature. So that's that when it comes to a little bit of action that we anticipate both for Paytm and Jio Financial Services put together. Bharti Airtel has also reported in the numbers, but what typically remains to be a bit encouraging right now, rather there will be some momentum, or let's just say it's expected to be in focus, will be HDFC Bank. HDFC Bank, along with that, there is a primary market offering two of them right now which are ongoing. First, we have APJ Surendra Park Hotels, which is the day 2 of subscription. Do bear in mind the fact that this issue has been fully subscribed. In fact, oversubscribed by 2.4 times on the day 1. And Madhukela wife back Rashi Peripherals IPO also will kickstart for bidding today. Let's address the markets opening there. Well, we're looking at a flat start coming in for Nifty 50. I wouldn't say that it's a bad start given the kind of negative global handover that we've had. We were anticipating some amount of losses right at the start. But let's just see if the selling pressure accentuates from here. What we also have is Bank Nifty, which at this point of time is weighing down on the sentiment. We're looking at losses to an extent of 0.3% for Bank Nifty, mid-cap index and the small-cap index. Mid-cap index, at least we're seeing some amount of fair bit of gains coming in for that one. And market breadth, as you see, that is one thing that we also need to check out for. NSE advances is higher as compared to that of declines. So clearly the market breadth is skewed in the favor of advances as compared to that of declines. The small cap index, look at the outperformance that has come through for the small cap index. And Nifty IT. Well, Nifty IT, we're looking at gains to an extent of 0.1% thereabouts for the sectoral index per se. Pharma also is seemed to be, is doing well. So both the defensive names per se, that is IT and Pharma, are doing well in trade today. Metal also is doing well in trade today. Let's move across to top gainers and the top losers of the day. Let's just to see where the momentum is stacking up. Bharti Airtel right at the top of the list after announcing in their numbers. Tata Motors, Ultratech Cement. These are some other gainers that we have on the list. Maruti Suzuki, Wipro and TCS. Well, these are some of the other top gainers that we have on the screen right now. So it's a bunch of IT names also, along with metals, which apparently are participating to this uptick of the markets. Let's flip across to top losers now. And also after that, look at HDFC Bank. Well, it's all the power stocks, right? Power Grid, NTPC, Hindalco. These are some of the top losers there. Well, a very dichotomic trend playing out between the metal. You know, you have one place, Hindalco, which is not doing well. JSW Steel, which is not doing well. And you have few names which are actually doing well as the top gainers. Axis Bank and Kotak Mahindra Bank again. These are some of the top losers. Let's look at first see HDFC Bank. How is that reacting? Because that apparently is the stock of the day. And, you know, we are going to be talking to Jio Thakkar in just a bit. But we also have Anirudh Garg, who is the partner and head of research at Invasset PMS. But before that, let's actually bring in HDFC Bank and the performance there, because that's clearly one stock that we need to highlight before we further get into the conversations here. HDFC Bank, well, a bit of losses coming in for that one. It's gotten an RBI approval to acquire stake in IndusInd Bank. Of course, later there were clarification which came in and said that the banks, it's not typically for HDFC Bank, but it is for AMC and the life insurance business. And since HDFC Bank is the promoter entity, that's where the application to acquire the stake to RBI has gotten from. And they intend to acquire up to 9.5% of equity in IndusInd Bank. Now, if you look at the shareholding pattern of just IndusInd Bank, right, the promoters and IndusInd Limited, that's the group entity, typically holds around 16.45% stake. Mutual funds hold 15.6% stake, while insurance, including LIC, holds around 7.04% stake. Right now, IndusInd Bank seems to be doing well, a bit in traction building in on that one. Bharti Airtel is the stock of the day, purely after the earnings that have come through. The revenue, if you look at that, you know, what typically brokerages make out of it, I'll just give you the key highlights to sum up the entire performance. There is a beat in India mobile business, both in terms of revenue and EBITDA terms, which is led by improving subscriber mix. There is a flattish capex sequentially, which has come a little lower as compared to the brokerage estimate. And of course, the cash flow there, generation there remains to be solid, because of which you're seeing some amount of momentum coming in. Jio Financial Services, like I indicated, it's denied in being in talks to acquire crisis hit Paytm wallet of 197 communication. Let's pull up Jio Financial Services. Jio Financial Services, well, some amount of losses is coming for Jio Financial Services. Do bear in mind the fact that this stock sprung up by as much as 14.5% to 15% after few reports suggested that it could be perhaps in fray to lap up Paytm's, the crisis hit Paytm wallet business. But of course, this was later denied by the management of the company. But let's now navigate our conversation to Anirudh, who is waiting on the sidelines and help us understand what does he actually make out of this whole fiasco between the Paytm. How does he look at, you know, does he now recommend Paytm as one of the buy? Which camp does he belongs to for Paytm? That's essentially one. And second, how does he look at Jio Financial Services? Morning there.
Morning, Nikki. Thank you for having me.
Pleasure.
So I belong to the camp where we are no against Paytm. We have been from the very beginning. You know, Nikki, there is a particular way how we look at new age stocks. When these companies like Paytm and Zomato, they came at a lofty valuations, we were very, very against them. This is an old economy run. I've emphasized it time and again that in an old economy run, there are only two type of broader themes that do well. It is either interest rate sensitives or it would be a capex theme. This time the conditions were better for the capex and they played out really well. When it comes to new age stocks, we are waiting on the sidelines. We'll wait for another couple of years. Let's see who survives, where management shifts happen, where the competition sets in, and then take a call for the next bull run.
Okay, there was a bit of chatter, actually, Business Standard report, which highlighted that perhaps both HDFC Bank and Jio Financial Services could be the possible contenders for lapping up Paytm's wallet. And we saw that momentum also playing up for Jio Financial Services yesterday. There was a good 15% uptick that we saw overall on Jio Financial Services. Of course, there is a bit of profit booking which was crept in today's session. How do you view this NBFC? That's point number one. Do you find the valuations reasonable enough? And at this point of time also, what kind of strategy can one really adapt or look at for this counter?
Are you talking about Jio Financial
Yes.
Services? Yes. So Jio Financial Services is a very solid bet. They're entirely different. So we have a very different stand on Jio Financial Services. I think it will be the leader when it comes to, what do you call it? The loans, retail loans, and also the partnership with BlackRock is going to help this company. Jio is backed by Reliance, and any company which is backed by Reliance and has solid plans for the future, be it Jio Financial Services, be it Jio Telecom, be it Reliance Retail, all these companies have a very bright future because you have solid money backing them. Then automatically you get the best talent. You have a very long-term vision. But when it comes to companies like Paytm, things are very, very different. I have dealt with Paytm. I've talked to their management. I have talked to their middle-level management as well. With the level of market capitalization that this company was commanding, I think the management was not in place. There were no solid fundamentals that supported this kind of, I would say, market capitalization that Paytm commanded. And things needed to be changed, and rightly they have. I think RBI is taking the right decision to set things in place for these digital lending platforms.
So what's your strategy for Jio Financial Services? Sure, it's a solid bet, that's right at the opening comment. But do you find the valuations attractive? And from a one-year perspective, not really a near-term bet, would you recommend a buy rating for this one?
Yes, for Jio Financial Services, we are still bullish, and we think that going 1 year down the line, markets now, Nikki, the major point is not Jio Financial Services. The major points of the markets are now entering a zone where they're becoming expensive, and with the rate that they are going, they'll soon become exuberant, and we'll see a lot of volatility and possible corrections going forward as well. So in the last 1.5, 2 years, I think this is the time we are exercising some caution. When it comes to caution, it comes to the whole market as well, and Jio Financial Services is also included in that. Yes, but as a company, the fundamentals are very solid, backed by a very solid group, partnered with the best in the world. So Jio Financial Services could be a part of the portfolio for anybody who's looking to invest in a quality NBFC.
Okay, quality NBFC. Okay, but let's take a step back and understand that the next big trigger for the market, of course, will be our RBI monetary policy. And the meeting for it at least starts today. The outcome would be in the next 2 days. We are seeing a lot of volatility playing out in the global markets, right? Especially in US and China. Massive carnage going on in small caps when it comes to China. Indian mid caps are running from the domestic liquidity too. What kind of sense are you gathering with what kind of expectation that you have from RBI monetary policy? That's one. What kind of impact do you see when it comes to the sectors if there is some amount of announcement that comes through? That's B. What's your assessment?
Okay. So first of all, to answer your question, there are a couple of them. Firstly, the RBI monetary policy. So the RBI monetary policy is a global phenomena, and it is held, every decision is taken by the Fed. We are just reacting to what the Fed is saying. So in the last episode also, I had mentioned that the Fed has now said that the inflation worries are over and they are now looking for a rate cut. Nikki, if we talk about the last 3 years, we generally have a tendency to go against the Fed, but the market doesn't. In 2020, when the Fed said that we are going to give money supply, we are going to print the notes, everybody believed that the COVID would take the markets down. It happened the other way around. In 2021, they said we have an inflation problem. Everybody was bullish, but the markets then they went down. And then finally today they say that, okay, the inflation worries are over. And now we'll give a rate cut maybe somewhere in March or somewhere in June. So now everybody's contemplating when the rate cut will happen. The point now remains, Nikki, primarily is that Fed has said that the inflation worries are over, and that is it. Rate cut is just an event now. So RBI, I believe, would react according to that. We were in a very, very comfortable spot when it comes to inflation. Our RBI did not give the necessary stops, and we did not see that inflation scare in India. RBI, I think, is in a very comfortable spot. We could see a rate cut coming soon. Uh, yeah, the election is coming. The food inflation could be a worry. So maybe this time we won't see a rate cut. But yes, a couple of months down the line, we are expecting a rate cut. And the RBI, Nirmala Sitharaman, the Honorable Finance Minister, had made it very, very clear that how they are promoting the bond markets in India. And that is also a very, very important step when it comes to looking at how the rates would flow in India for the next, I would say, a couple of years.
What I'd also want to chat about is how do you look at, do you expect some rate cuts to come through? If not rate cuts, maybe CRR or OMO operations to come through in this monetary policy. What's your expectation there? And B, in light of that, how do you see the banking sector? That's B. C, also your views on HDFC Bank because of the development which suggests that it's going to be lapping up for the subsidiaries that's taken in IndusInd Bank.
Okay. So first of all, when it comes to, are we expecting any rate cuts or, yeah. So this time we're not expecting any. We are going into the election year and I think the government would maintain the status quo. That's our call. And the next thing is you were asking about HDFC Bank. Yes, I think when it comes to the valuations of HDFC Bank, they are where they should have been. They've taken a price cut, they've taken a time cut. Though we are not invested in HDFC Bank, but we may be open to looking into HDFC Bank in the very near future. As the markets, they are turning expensive now. So counters like HDFC Bank would provide us a degree of comfort going ahead due to their low beta overall. And then when it comes to IndusInd Bank, the HDFC IndusInd Bank thing that was happening, I don't think there is a need for HDFC to do that. I think it'll be more of a diversification. If that IndusInd Bank HDFC deal happens, we'll look at the things. I think HDFC Bank has a strong counter in itself, a strong business model in itself, and they should first really work upon getting their things in place with the merger with HDFC Limited and get things in order on the ground, then go in for such investments.
Okay, clearly these investments are not for the bank per se, but for AMCs and insurance for which they've taken their, approval. In light of that, also, would you hold the same view?
Actually, we have not been studying it that much currently. So I think it would not be prudent for me to comment on how HDFC Bank is going to handle the stake that they are got the permission from the RBI to invest in.
That excites you within the primary market right now? We have a couple of listings this week. Also, we have a couple of IPOs which have opened. One point is the Rashi, that's Rashi Peripherals, which is a Madhukela wife-backed company. The other one, of course, was the Park, which opened for subscription today. And then we have the two small finance bank. Anything that looks interesting from the space of the IPOs this week around?
Currently, we are in a phase where we believe that the markets, as I told you, have become expensive for us. So right now we are taking a step backward at Invasset PMS for us and all our clients, though it's a personal call for us. But yes, we've been very bullish for the last 1.5 years. Our PMS has performed pretty well in last year. We were the best performing PMS in the country. But yeah, now as the market, it's more of a behavioral thing. The way the retail is
I'm sorry to cut you there, Anirudh. I'm so sorry to cut you there. But one thing that I understand that right now you're being a little more conservative when it comes to deploying the money out there in the equity markets. But even at this time, when you're sitting high on cash, what is that one bet or theme that you're completely gung-ho on, irrespective of which direction the market goes?
The themes, if you talk about the broader market run, there is no problem with the themes that are out there. So the CAPEX theme, which includes defense, railways, infrastructure, power, the themes are all right. But sometimes they just get a little bit overbought. And then the market just needs to take a breather. So the themes are out there, are perfectly all right. The public CAPEX has done its part. The private CAPEX is now going to join in. That'll add to the capex theme. And then the Fed saying that the inflation is now under control, domestic interest rate sensitives which are dependent upon domestic consumption like real estate and autos could do pretty well. And if the global growth kicks in, which we are a little bit skeptical about, sectors like metals and all should do well. There is a lot of shortage for metals and scrap in India. You can feel it on the ground. There is a lot of shortage for copper scrap in India. There is a lot of shortage for copper and aluminium in India. So metal sector should do pretty well going forward. Yes. So the overall theme is okay. The old economy run doesn't have a problem, but now the problem remains entirely on if the market is expensive or not, and if a correction comes, how deep would it be? Yes. But if you are talking from a 2-year perspective, yes, the themes that I talk about today, we are very gung-ho and bullish on them.
All right, Anirudh, we'll just leave it at that. And thank you so much for taking out the time and having this conversation with us.
Thank you, Nikki.
Pleasure. Well, joining up next is Jio Thakkar, who heads the derivative and quant research at ICICI Securities. Morning there, Jay.
Hi, very good morning to you, Nikki.
A bit late start to the day, Jay, but nevertheless, we're here. Let's talk about what's your strategy on Nifty. A bit of momentum that seems to be, it's a flat start, of course, in the anticipation of big run up to the big event, next trigger RBI monetary policy. So my question really to you is split in two parts. A, help us understand what should be the strategy ahead of the big event, and B, what kind of resistance levels can one look at for Nifty and Bank Nifty?
Well, first of all, definitely, apologies for joining in late. Got stuck up in the traffic, but then yes, nevertheless, I've joined. So,
no worries.
My view, Nikki, is that 22,000 on the upside is the near-term resistance for the Nifty. And I don't think that it will be taking off those levels quite easily. I mean, if Nifty takes off 22,000 levels, then definitely, you have further move until 22,500, 22,800 levels on an immediate basis. That would be a big breakout, Nikki, about 22,000. But then failing to do so, I think Nifty might just consolidate it within the range of, say, 21,600 to 22,000. By that, I would say, Nikki, that 21,600 on the downside is a very crucial support for Nifty. I mean, till those levels are held, there can be stock-specific momentum continued on the long side, and there can be some profit booking seen on the those stocks wherein we have seen good kind of run up. But if 21,600 breaks, then I fear that markets are again heading towards its previous lows of 21,000. So yes, there would be a 600 points move either side, Nikki. Either below 21,600 is going to 21,000, and about 22,000 is going to 22,500, 22,700. Till that happens, I think markets are just likely to consolidate within this range of 21,600 to 22,000. And as far as Bank Nifty is concerned, wherein we have seen good pressure coming in, that is where we have seen Bank Nifty has in fact added pressure on Nifty. Now, Bank Nifty has a very crucial support, Nikki, around the levels of 45,500 to 45,000 range for this week. I mean, that tomorrow is the weekly expiry. So that's the range or the lower side. That's the support level to watch out for. I mean, if it falls around 45,000, 45,500 range, definitely one should be attempting to buy for a bounce back. But then I even don't expect Bank Nifty to take off its recent highs of 47,000 immediately, ahead of the policy. So 45,000 to 47,000, that's going to be the range of Bank Nifty. If it falls to 45,000, that would be a very good risk reward opportunity on the long side, just from the point of view of Nifty Bank will become quite oversold then.
Okay. I'd also want to chat about how can one now look at Paytm? That's one. I don't know if it's an actionable idea anymore because it's also come in that ASLM, particular category. So that's one worry out there. The stock is at that ASM stage 1 category and it's lost around a percent out in today's session. Of course, 40% has been wiped out in previous few trading sessions. How can now one look at 197 communications?
See, technically, I would say that Paytm has broken all its previous lows. I mean, it's at 52-week low, it's at life low. I mean, when the stock is trading at life low, Nikki, technically it would not make any sense or going or and buying that stock unless there is a very good clearance fundamentally from the issues which it's going through. Or maybe if someone comes, buys Paytm, and thereafter, there is a good revival strategy that's been discussed with the shareholders. I think till then one should definitely avoid Paytm. I understand that whenever markets are at or whenever stocks are at these levels, most of the negatives are there, and that is where one has to become quite contrarian and go and buy. But in the case of Paytm, I would not say that. Had it been any other stock wherein fundamentals were in place, it's just a technical correction out there, you can go and buy. I mean, that is what happened with Adani. I mean, fundamentally, the company was going concerned that there was no problem at all from the regulators, right? And there was just a report because of which the stock prices of the entire group had fallen. That was the opportunity. Now, if you compare that with Paytm, I don't see that's the same. Here, there's a problem with the regulators of the country, and where it's actually operating. It's not any fundamental report. So I think the issue is different. Hence, going and buying, and bottom fishing would not be a good idea. Can it go up 20% from here? I don't know. It's anyone's guess now.
Okay, you pretty much drew parallels of Paytm with Adani group of companies. That was a little bit of surprise there, A, because you spoke about the fundamentals, and B, of course, there were also some concerns around the Hindenburg, allegations, which of course was shot down by the regulators. But without further getting into this issue, I'm just going to touch base on HDFC Bank. That again is trading near that 52-week low level, or it's nearing that 4 to 5% mark of being around that 52-week low level. A, how do you look at that? And also next that I'd want to chat about is Jio Financial Services. After the sharp run up that it has seen in previous session and a bit of profit booking that has crept in early deals today.
Well, see, as far as HDFC Bank is concerned, Nikki, the stock has clearly broken down from its crucial support level of 1500. To me, I mean, if we have to see a momentum coming back into the stock, wherein someone buys and get good returns continuously, then it would be only above the levels of 1500, wherein you can get that momentum back. Because above 1500, I don't see any further resistance until 1700. So if the stock manages to surpass 1500, yes, you can definitely jump and buy. Thereafter, the stop loss will be 1400, the target will be 1700, or maybe, something like that. The risk reward would be 1:2 kind of a thing. Right now, I think it doesn't have a good risk reward. However, Nikki, I would say that 1400 is a very crucial support. If it takes a pause there, it would be good. If it breaks that, the next support level would be somewhere around the levels of 1300. So I would say that one can stay away from HDFC Bank till the momentum is back. From the long-term point of view, I think if it falls to 1350 to 1300 range, it would thereafter become a very good buy from the risk point of view in the long term.
Okay, and could you just reiterate your stance for Jio Financial Services? Because
sure. See, as far as Jio Financial Services is concerned, Nikki, the kind of yesterday's move that we saw in this stock, it has clearly broken out technically. There's a rounding bottom pattern breakout from the stock above the levels of 260, 65 range, and till those levels are held, I mean, the probability of this stock trending with a positive momentum, heading towards 350, 400 is quite high in the long term. So I think it has recently provided a breakout. That is just yesterday. That too happened with the volumes. So it's a price volume action that we saw yesterday. Hence 260 on a closing basis. If those levels are held, 350 plus 400 levels, I mean, this is where it's inching.
Sorry, on the upper side, you said what levels for Jio Financial Services, Jay?
350 plus levels. 350
and
plus.
That is achievable by when?
I think that can happen very quickly, as the run-up has happened quite sharply with increase in volume. So I don't think it would take more than a couple of months.
Okay. So ahead of general elections is what can one look at? 350 levels for Jio Financial Services?
That is very much possible.
Okay. And your top recommendation of the day, Jay?
Sure. Now, as far as I think my top recommendations are concerned. So I would say that Nikki, there is as far as financials are concerned, I think Bajaj Finserv. I mean, that is one stock which is looking weak as of now, and I think there can be some profit booking out there. The correction can be seen until the levels of 1550. The stock is trading around the levels of 1612. So on the upside, I believe that 1670 is a very clear resistance. 1550 to 1530 can be the likely target. So Bajaj Finserv can be shorted. There is one stock from the metal pack that I like, and that's Jindal Steel. I mean, that has provided a very nice breakout from a sideways consolidation. As a disclaimer, I would say that we have a technical buy recommendation on this stock as well. Although it's trading with a negative bias today, Nikki, but then on the lower side, I would say that this stock has a very good support around the levels of 735. So 735 is a good stop loss for this stock. And on the upside, one can positionally see the target of 800s. So these are the two stocks, one on the long side and one on the short side.
All right, Jay, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation.
Thank you.
All right, what I also want to talk about is BLSE Services. It's a new kid on the block. It's going to be listing in today. And the grey market premium is same as almost 159, where it was 159. This indicates that the share price are almost expected to trade in at a premium of 159 in the grey market. The final issue price has been fixed at 135 per share, and of course some amount of premium expectation there on back of the subscription that has come through on this IPO. Almost 162 times on the third and the final day. That's the number of subscription that we're looking at for BLSE Services, which is just going to be listing in a few minutes from now. The bids were led by non-institutional investors, retail investors second, and the third category is institutional investors. But that's all that we have in this edition of Trade. Thank you so much for joining in. And with this, it's a wrap. And goodbye from the entire team who puts this piece together just for you. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Money Control app.